Now, the Fed's September cut extended a fresh lifeline to Wall Street with U.S. stocks close to record highs. But beneath the surface, there are signs of a shift that was reflected in market moves last week. First, let's take a closer look at how broader assets traded last week. Oil was the top gainer last week, surging over 6%. Brent crude notched its biggest weekly gain in more than 3 months, rising past the $70 per barrel mark for the first time since late July. While there is no indication that a broader downturn in global markets is imminent, the landscape is more fragile than it was just a week ago. Flows are moving into safer assets at the fastest pace in months. Gold is the biggest beneficiary, rising nearly 2% last week, adding to the over 10% surge. Since August, that comes even as the dollar had its strongest week since early August, gaining 0.5%. However, traders have added to their bets against the greenback, with speculators holding $8.6 billion in aggregate shorts. Adding to the diminished sentiment, cryptos at one point shed roughly $300 billion in value last week. A wave of forced liquidations dragged Bitcoin and Ether sharply lower, marking one of the most volatile stretches since the summer. Now turning to Asia-Pacific stock markets, most regional benchmarks ended the week in the green, barring India, while stocks in Japan, China, and Australia closed marginally higher. India's Sensex shed 2.7%. Trump's dual shocks have also thwarted bets on an Indian stock market rebound on the boost from GST cuts. In the Americas, the S&P 500 fell 0.3%, the first decline in a month. The tech-heavy Nasdaq 100 also notched its first down week since the end of August with a 0.7% drop. Whether by instinct or fatigue, the pullback reflects a broader reassessment of risk assets. While Canadian stocks were steady and unchanged, Brazilian stocks fell a touch from Trump's tariff shocker. Across the Atlantic, European stocks reflected economic optimism despite France's troubles in managing its finances. It was a green reading across European benchmarks, with the UK's FTSE leading the gains. Trump's tariffs on patented drugs late in the week weighed on pharma stocks in the region. Still, broader European stock benchmarks closed out the week in the green. Having looked at market moves, let's now take a turn to the overall economic outlook. Let's take a look at the Asia-Pacific region. In Asia, China's economic activity slowed more than expected across the board in August, with a sharp slump in investment. The earlier boom of Chinese exports is also starting to cool off. India's economy continues to defy global headwinds and Trump's tariffs. The country remains the fastest growing major economy in the world. The outlook for Japan and Australia continues to remain under pressure from Trump's tariffs and trade policies. In the Americas, Trump's policies are weighing on the economic outlook, especially with the jobs market slowing significantly. If leading indicators of past recessionary trends are anything to go by, a large swathe of Americans are already feeling the pinch. Canada, Brazil, and Argentina are also weighed down by Trump's trade rhetoric. In Europe, the prospect of France reducing its deficit below 5% next year is rapidly diminishing. The outlook for the rest of the countries in the region is equally negative. In the UK, the budget deficit surpassed expectations, and that is bad news for Chancellor Rachel Reeves as she prepares for a tough budget. Tax hikes loom as Reeves looks to plug the fiscal black hole.